All right, Hops here with MD Live, and we're gonna do a quick run through of a bunch of options just to show you what they look like after earnings, right? So you get the idea of what's the difference between a call at 6 days to expiry versus 20 versus 45, right? And what does that matter? So we'll go through a couple of options. I'm going to go and we're going to look at ULTA. If you haven't been familiar with ULTA, ULTA took a pretty heavy hit back in August. Yeah, August. Um, Back on the earnings, and it was a pretty big gap, right? And so we love gap fills here at MD Live, and so we've been tracking this one for a bit. So this one already did make some moves, and we're going to do rewind trading on demand through TOS to kind of demonstrate this. So without getting too deep into that, let's just jump into it. So you can see we've been tracking a falling wedge here, waiting for breakout, but earnings is coming up here soon, and we expect that this is going to be better earnings, and they're going to have better news than what they had last time anyway. So we're going to go ahead and make some good bets on some calls here. And by the way, we already know which way this goes, so this isn't too crazy. So what we're going to do here is we're going to do some kind of near the money options, and we're going to do some out of the money options, and I'm doing near the money at 240 because we're going to do some later on at in January, so 45 days out. When you get that far out, they don't do these 37.5s, right? So it's just wholes and halves. So we'll just do 240 and 265, right? So that'll be our far out of the money, and then this will be our near the money or at the money call. So we'll just get straight into it. We're not going to really talk about best pricing or anything like that, because we're just going to demonstrate how these options react after the earnings call. Okay. So we're just going to go and buy this one. This is going to be our 240 December 6th, and we're just going to go ahead and submit these. And a 265 December 6th. Send. We're going to minimize that. Go to December 13th. Do the same thing. Send. 265. Confirm and send. We'll do this as our monthly. And you'll see something later on, which is pretty interesting, between our monthlies and our weeklies that we just bought. And then we're going to go pretty far out, and we'll do January 17th, 240, sorry. Confirm and send, and 265. Confirm and send. Okay, so when we go to our monitor, you'll see we have them all here. December 6th, 240, 265, 13th, December 20th, and January 17th. And so you've got all our trade prices, what we bought them for. No real P&L yet. And by where we're paused, right? So we're not going to be expecting any movement until we do this fast forward. So without any further ado, I'll just fast forward this directly to after the earnings, which would have happened on Thursday evening. So we're going to go straight to Friday morning at 8:04. And it's going to pre-buffer, and boom. Okay, so we made some pretty amazing moves here, right? So let's just run through them. Our December 6th 240 call, right, which would have been, expiring that same week. These would be our cheapest call options that we bought. We paid $7 per contract for that, so $770 out of our account. And it's currently trading for $24.10. That's a $16 profit. That comes out to 212%, right? So that's a pretty fantastic return. If we come down to our cheapest options that we bought, which would have been out of the money at 265 at $1.55 per share, so $155 out of our account to pick this option up. That one is trading for $2.75 or $1.03 profit per share, which comes out to only about 64%. Now I say only because that's pretty small in relation to the rest of these, but it kind of demonstrates to you that with only one day, actually these expire the same day that we're selling them here, right? So there's no time left. Really, all you're banking on here is the intrinsic value, right? So keep that in mind. So this is our lowest yielding option, right? But that's because there's no time left on it. Moving down to the 13th, right? We see a different story and things start to turn around. So we bought this one at $9. It's currently trading for $24.65, which is a 16.50 profit, which comes out to about 181%, right? So that was your at the money. You're farther out of the money. 230 is what we paid for it. $660 or $230 out of our account, and that's selling for $660 a piece today, which is a 358 profit. That equates to about 155%. So you're at the money paid better than you're out of the money in this case, which is the same as your December 6th. You're at the money paid better than you're out of the money. Going to your December 20th, where there's still 14 days left on this contract, we paid $10 for this. It's selling for $25.60 now, $14.76 profit. It's about 148% profit. We move down to the out of the money call at 265. We're looking at we paid 278 for that. It's going for 830 now, right? So that's a $4.83% or $4.83 profit, which comes out to 169%. So you see a shift here, right? So your out of the money call is now making more than your at the money call. And then when we go to the January 17th, pretty much the same story. We've got 42 days left on this one. We paid $12.35 for that, quite expensive, but it's selling for $29.45 now. There's 42 days left on that. That's a $15.28 increase, or about 122% profit if we were to sell it right now. The out of the money call, however, we paid $4.50 for that one. It's selling for $13.55 now. That's a $7.61 profit, or 165% profit. So this one gives you 165%. This one gives you 122%, right? Same as the other one, 169% versus 148%. So there's a flipping point once you get past that 21-day period, or 10-day period, sorry, where time value starts to make a difference, right? So having more money and having out of the money calls gives you an opportunity to make more money because there's more potential there, right? So kind of gives you an idea of how these options react in relation to earnings. Big giant spikes, just to give you an idea. This is that spike, right? So this is what we just traded off of. Pretty big movement. It was 240, it just jumped to 265. So pretty close to where, or right at where we bought our option. So that gives you an idea. So yeah, study this, look at this, and kind of get an idea. Totally encourage everybody to go to OnDemand. Just try to find these setups, any setup really, and trade options. Learn about what that means to you, right? We just made $13,000 just playing with these. I mean, we knew what it was going to do, but you kind of see the idea of how that works, right? So hope this helped. Have a good time. And remember, plan your trade, trade your plan. Stay green, my friends.